What is up, traders? Hope you all are doing well. Another video here from the Dark Side team. And on this particular scenario, I wanted to give you guys an idea of just how ruthless the market can be and how it really doesn't matter what pair you're looking at. And for this one, I selected oil. This is nothing. This is recent price action from the last couple days, maybe a week or so. So this is all very relative information, nothing cherry picked. And again, a lot of people like to focus on GU, EU, GJ, GA, the major pairs and the highest volatility pairs, as they like to say. But the thing is, guys, like we were saying before, it doesn't matter what pair it is, what scenario, it just doesn't matter. It can be anything from indices, US 30, German 30, it could be US oil, it can be EU, it can be GJ, it can be Euro, North Korean krone, it could be anything. Okay, these things, they're irrelevant when it comes to the market. They don't care about that stuff. What they care about is liquidity and trapping the market. So in something simple as oil right here, I'm going to show you guys an example of what we mean by that. Now, as you can see, let's mark out some basic structure for everybody. As you can see here, you've got ascending structure. Go ahead and mark that out. Right into here. Okay. We will call this our break of structure. At this point, we're looking at a structural trader strategy. Okay, so we've got our higher high, higher low, higher high, higher low, higher high. We've got our break of structure, absolutely. We've got our sell-off. Most likely this was at a Fibonacci point. Sure, let's just measure it out anyway for the Fib traders. And we see price taps in just about, this is OTE. This is the famous ICT OTE level. You see, just short of 78.6. So we've got a rejection at OTE. Great setup. This is where the ICT guys get in and trade. They sell. It would have been a beautiful sell-off. Keep in mind, a lot of people say Fibonacci trading doesn't work. You can see here where a Fibonacci trade actually did work. The 61.8 traders were trapped the first time. Let's go ahead and highlight that. Let me put the values on there for you guys. There we go. So we can see that the 61.8 traders were actually tapped into the market here. They've got their bearish engulfing. For the candlestick traders, we've got a bearish engulfing, bearish engulfing. They were short at this point, only to be hunted. This probably happened at around the close in New York. They were probably hunted through Asia, hunted into London Open, and then price melted down. But you guys can go and time check that if you like. Regardless, guys, we're talking about oil here. Oil, okay? The same thing that's supposed to be driven by production and numbers and people driving. That's what drives oil. But yet we can see the manipulation clear as day. 61.8 traders tapped in, tapped out. OTE traders tapped in, and we'll see what happens to them as well. So we've got fib traps already. We've got structure traps going on. Again, we're talking about oil, a commodity. Come on. All right. If you look a little bit closer, we can also see we've got our 4-hour order block. We've also got a 4-hour imbalance. Okay. So the order block, as you guys very well may know, is this green candle right here, the last buy before the sell-off. That would be the order block. Writing that up for you. Okay, so we're talking about this green one in here. So if you're looking to guys to get into order block trading and stuff like that, save yourself some time. Just Google it, look it up, or talk to whoever it is that you know that's trading at a high level. You don't need to buy another course to explain to you what an order block is. You don't need another course to tell you what an imbalance is. You don't need a course to tell you what structure is. You don't need a course to tell you what a trend line is. How many people do you need to tell you the exact same thing in different words? I mean, it's ridiculous at this point. Everybody tells you what it is and how it works, but nobody tells you when it works. They tell you, oh, it might work here, it might work here. Yeah, but it's not about if it works, it's when it works. That's important. Just like we saw the Fibonacci trap here, it didn't work, but then OTE worked. Why does that happen, guys? It's not. I can show you how to draw a Fibonacci all day long. I could show you. You got to do the swing high, swing low, but it doesn't matter. It matters when it works. It didn't work here. It worked here. Why? Nobody answers these questions. They just keep renaming things. All right, sorry. Let me get back focused here. So yeah, like I was saying, here's your order block, okay? It would be 50%. A lot of them like to trade 50% of this body here. So let's go ahead and map out 50% of that. We'll take our Fibonacci to do it properly. 50%. Let's go ahead and change our settings. Throw the 50 on there. Okay. So we've got 50% of the entire candle. Some people like to use 50% of the body. Perfect, we could do that too. Really doesn't matter, guys. What we're looking for when we see these things is we're not looking for any particular volume or any particular side part of that candle. We look at it an entirely different way, and I'll show you. So let's just go ahead and throw the 50. So that would be an entry zone there. Remember, guys, don't forget that's going to be our order block entry, okay? We've also got our imbalance entry criteria, which is going to be this 4-hour imbalance. Super clean. Super, super, super clean. As you can see, the imbalance, guys, is the area where there is no other candlesticks covering it, making the imbalance. Again, if you're not sure about imbalances, please, we're not looking to teach you about imbalances. It's free information. It's all over the internet. You can find it wherever you want. Don't buy another imbalance course, guys. Please save yourself some time and money. My God. So here we are. We've got our imbalance marked out. Let's go ahead and extend that all the way over. And then take a look at what we've actually got cooking here. So, yeah, that's good enough. Right? We'll extend it all the way out. This is going to be our hot zone. Okay, so we've got our imbalances marked out. Let's take a look at the chart from a bigger standpoint, clean it up a bit, see how much this makes sense. Okay, ascending price action, beautiful, looks good, clean order flow, break of structure, push to the downside, nice. Anticipating a reaction from this clean 4-hour imbalance. Keep in mind that everybody says it's the part that broke the structure that's important. So this 4-hour zone, that this is a clean trade based on most strategies. And again, nothing against the strategies, guys. It's knowing how to use them. Okay. So we'll allow price to go ahead and start into that zone. As you can see, price runs into the zone. I mean, you can't get more precise than that. You know, you've got your 4-hour imbalance has been filled for the most part. You've got nearly your 50%. Remember, this was our order block, guys. This is our order block entry. So we've got that being tapped as well. Go down to the 1 hour, make it a little cleaner. See what's really going on here. Okay, so we've got clean ascending order flow into the zone, compression as they like to call it. We've got, this should be perfect. We've got equal highs here, which everybody loves to see before an entry, and then the tap into the zone. Taps the zone, clean break of structure, and we are back to the same scenario again, guys. Once again, what are we seeing? We are seeing clean ascending order flow. Let's brighten that up. We are seeing clean ascending order flow into the high probability sell zone. Okay. Right into here. All right, we'll say, yeah, that works. That's clean enough. We've got our break of structure. And what does this do, guys? This also creates another opportunity for sellers to enter the market, structural traders or whatnot. So we'll just say that there's an imbalance up here that they're watching for. Go ahead and make that red. Just try to make it stand out a bit. And so we've got sellers anticipating this zone as well. Again, let's go back, see how chart's looking at this point. As you can see, we have our break, continuation right into here, ideal sell zone. Obviously, they're anticipating another lower low, where price would come from this point to make this low, to make a new lower high, to make a new lower low. All right. Let's see how price reacts here. Okay, we see price flying in. Okay, look, very important to notice right there what just happened. We've got another break of structure, okay? Now what that's going to do, we can even back that up a bit just to make it more clear for you guys. What that next break of structure does, it's going to create another opportunity for sellers to enter the market. Here's your break of structure here. Okay, let's let that play out. Break of structure here. Invite sellers also to start looking at this zone. Why is it doing that? Because what are they doing? They're seeing descending order flow now. They've seen their reaction out of here. They're expecting continued downside. So what do they see? They see here to here with the lower high brought you a lower low. So this area would have had to act as a sell zone. Why wouldn't it? Why wouldn't this area act as a sell zone? It should be perfect. Remember, price reacted out of our 4-hour order block. right here, 50%. Our 4-hour imbalance as well. We've got bearish engulfings all over the place. We've got a break of structure as well. We've got a retrace. We've got clean order flow to the downside. High, low, lower high, lower low. This should be the sell zone, obviously. This is what you would anticipate. And as you guys all know, that's not exactly what took place. Price actually exceeded that. So what did it do? It created another trap here, which we spoke about. So if you missed this entry here, you would have said, oh, I may have missed the move. So you would have got tapped out right here. You may have missed the entry right here, thinking it was short of your zone. Let's see how they play it. And boom, at this point, you're completely screwed. You have no idea what's going on. They baited you in here. They baited you in right here with this one. Then they baited you in here. You've got some descending price action going on. I'm sure on low time frames, you would have saw a 5-minute break of structure, and then you saw a direct drive of price like that. Now, what on earth would cause U.S. oil prices to just automatically spike like that? It doesn't make sense, right? But it does if you're thinking about the composite operator's job and to build liquidity and take it from you. They built this whole scenario and engineered this to take your money. Nothing happened to oil prices. No oil places were bombed. Nothing happened. They didn't spike. This is just all the way it works. Maybe there was a Bloomberg update saying something happened with oil. Oil bulls took over something. Anything to kind of disguise what's really going on, you know. And that's what the market does. So let's let this play out. And that's exactly where price is right now to the day on October 5th. So imagine, you know, this whole scenario. Look. I mean, when you zoom out and look at it, look at all the things that take place, all the traps that were made. You know, you can even look in here. You can even see the trend line traders were trapped. You know, they were tapped in, tapped in, tapped in. I mean, these things don't happen by mistake, guys. Look at how clean this stuff happens. You've got the touch. You've got the touch. You've got the touch. You've got break of structure. This is all manipulated to get you on the wrong side of the market. You know, and what we do on the dark side is we that's why we don't discriminate against any strategy. We appreciate them all because the better you know them, the better you know what to look for. You know, and we were all over these trades. I posted one of the sells that I had in oil just to show you guys that it doesn't matter the pair. And then I have another buy that I can kind of point out to you. I can't give away too much. But if you look here, it's the same thing that you guys all know. It's the order blocks, the imbalances, it's the Fibonacci levels. It's the same thing. I had an entry in here that I'm still holding on, and it came from a 1-hour order block, 1-hour imbalance. Call it what you want. Doesn't matter because it's not about what it is. It's about when it works, and that's the thing that's important. And if you look here, there's no secret to this. There we go. We've got our 1-hour imbalance, as you can call it if that's your style of trading, or you can call it your 1-hour order block because I'll put the 50% right inside the candle. Again, the last sell before the buy. So it doesn't matter what you call it. You know, now I'm using order blocks. You know what else I'm using here? I'm using structure, which sometimes works, sometimes doesn't work. Where's the structure? Let me point it out. Low, high, higher low, higher high, higher. I'm using structure too. That's a structural point. Let's see if it's a Fibonacci level as well. Let's see if we use the swing points here to here. Oh, look at that. It also happens to be right around the 50. So it's almost a Fibonacci level. Guys, it's not if these things work, it's when they work that's important. So if you want to continue to look at the same stuff, you know, without a different perspective, you're going to get the same result. Okay? Look at where oil is now. Our position is a lovely position. You can see clear as day where the entry would have been, where the stop is. There's no secret to it. You put your stop below the low. That's it. It doesn't have to be a 2-pip stop for a 1 to 1 million risk reward ratio like everybody's talking about. If that was the case, they'd be billionaires and FTMO would be out of business overnight. That's not what's happening, guys. Okay? You give yourself a little breathing room. Let the trade play out in your favor. Let it breathe, okay? And then look at the result. You're good to go. You are good to go. You have nothing to worry about. Oil is now reaching zones that it hasn't been into a long time. And what we can see is we have upside potential all the way up into here. So until price action shows us something differently, we'll go ahead and hold this trade. It costs nothing to be in it at this point. And that's what we do here at the dark side, guys. We anticipate the moves, we combine it with other strategies, and we take advantage of them. It's not if these things work, guys, it's when they work. Okay? And we'll be sending you some more content here and there. As I mentioned in our previous video, eventually we'll open up some more spots into our team, into our Discord community. And again, guys, I hope this helps. There's nothing against any strategy that's out there. Learn them all. We love them all, but it's knowing how to use them. We'll talk to you soon. Bye-bye.